What impact do you think this hold on rates is going to have on the inflation outlook, which is clearly a concern for the Bank of Israel?
Well, first of all, I want to say that in light of all expectations, the Bank of Israel did leave the interest rate at 4.5%, which has been its level since the beginning of the year. Back then, by the way, it was reduced by 25 basis points. And of course, unlike other developed markets, it is clear now that the interest rate here in Israel will not go down, at least for a year ahead, and might even go up. Well, you mentioned the inflation rate. The inflation actually went down until June this year, and things were looking good, and people were talking about rate degrees. But ever since, the inflation is going up and is above 3.5%. Of course, the Bank of Israel has an inflation target between 1% and 3%. And to my estimation, inflation might even go higher in the next months. So this will complicate things for the Bank of Israel, among other things.
So you're talking about the prospect of inflation continuing to rise while GDP growth remains stagnant. That's stagflation, is it not?
Well, I'm not sure it can be called stagflation as of yet, but of course it is a very worrying trend, because the Israeli GDP is getting lower, and upon some negative scenario, it might even turn negative in the beginning of next year, should the war continue and the military expenses go higher. And then, if it happens, maybe we can call it stagflation. But I have to say that there are early indications for the economic activities in the third quarter of the year, which are quite positive. I mean, right now, our level of GDP is not as it has been before the war erupted, but there are some positive signs, and I think that the Israeli economy in the past knew how to get out of situations like this. And should a political arrangement arise in the near future, the gross economy in 2025 may even surprise to the upside.